Let's talk to Clem Chambers from Investors Hub. Clem, very good morning to you.
Good morning, Nick.
Right, weekly wrap in terms of the indices, Bitcoin. I guess we should touch on oil, given the recent developments in the last 24 hours. What are your thoughts this morning?
Well, what's going on is that QT, quantitative tightening, is dead. And in Europe, last week, out came the European Central Bank and said, here you go, guys, more money. Do you want some? Have some. Here you go. And by the way, if you save, we're going to punish you. So they're really pushing the liquidity in Europe. The Fed, it looks like it's going to be dropping its rates. It's finished its QT. Think it might be starting QE soon. So more QE, straight into equities, up goes equities. So, it's going to be another rally. The only thing that might spoil it are, of course, the flying circus of clowns that are out there in the world of politics. And, of course, Iran, which is obviously a flying circus of clowns and has been for a long time. And the trouble in Saudi Arabia, I mean, yeah, sure, of course Yemen is building computer drones. Yeah, of course they are not. So, yeah, it's Iranian drones, isn't it? So, that is relatively a spicy situation. And up goes oil stocks and up goes oil as well. So that is pretty much the only thing that could rain on my parade at the moment. I mean, Bitcoin is still strong. Of course, I've got quite a lot of Bitcoin as a hedge from bad news, and a hedge for British Brexit as well. And if it does kick off in Iran, I think the Bitcoin hedge will, soften the blow quite a lot. So Bitcoin, you've got to be bullish on Bitcoin. China, trade war is bullish on Bitcoin, and Iran is bullish on Bitcoin. So that's a good hedge against equities. QE, dropping interest rates, is going to be great for equities, especially for knocked down big cap blue chip dividend payers. Now, in the US, that's a small group. I mean, they don't pay much. They pay 2%. But if you go outside of the US, you get ridiculous dividends. You can get a blue chip dividend of nearly 10% in companies in France and in Europe too, and in the UK too. So, those shares are going to go on a complete tear because interest rates are gone. Money's going to go into equities. Obviously, it's going to go into dividend paying equities. And that is what's been going on the last couple of weeks, as I predicted over these last few shows. And it's happened. And these guys are up about 8%, but they've got 40, 50% to run if the flying circus of clowns don't rain on the parade. And of course, one thing you know about politicians, if anybody can ruin a good party, it's them. So, you've got to keep your eyes on developments.
On that note, Clem, thank you very much indeed for your weekly update. That's Clem Chambers from Investors Hub. Thank you.
Thanks, Nick.